Well, good morning, Jagender Rana here. Topic of the day is huge untapped insurance market of India. Huge untapped insurance market of India. India with a population over 140 crore is in its nascent stage when it comes to the insurance sector. Its market accounts for 1.5% of the world's total insurance premium despite its population. Coverage provided by traditional life or health insurance models or even by general insurance is very low in the country. That is because more than 70% of the citizens lives in the rural areas that have remained untapped by major players in the insurance market. At present, life insurance coverage in India, or especially in rural India, is set at a mere 8 to 10%, while less than 20% of the rural population has any form of health insurance. Also, 95% of Indian housing lacks any form of property coverage. So, India has extensive geographic and economic variations causing the low coverage rates prevail in the country. Additionally, several internal challenges still exist in the country, including distribution challenges like last time access, lack of sustainable products, transactional inconvenience, and among others. So, a report published by Boston Consulting Group named Changing Face of Indian Insurance highlights that insurance schemes such as the Pradhan Mantri Fasal Bima Yojana have increased crop insurance coverage by 6%. Also, the rural insurance scheme introduced in September 2016 has already insured upwards of 9 crore passengers. So the government is helping speed up the process of providing insurance coverage to rural India. However, there are two elements that are crucial in pushing towards or pushing forward this initiative. First one is technology. The penetration of unexploited insurance market of rural India cannot be achieved without creating more technology-led accessible models and products. So these need to be specially curated, keeping the needs and income levels of the target population in mind. Some of such models and products are digital banks built on Aadhaar architecture that use AEPS for transaction, make digital financial services accessible to rural population. Insurers can bundle insurance policies providing health, life and livestock and make them available digitally for easy accessibility. Online insurance policy selling platforms are offering rural insurance policy that can be easily bought digitally. Individuals don't have to go to a brick and mortar office to review and purchase policies. They can now do it from any smartphone or computer and an active internet connection. Insurance mobile solutions is an important development in this context. Every second person has a smartphone and rural India is no different. So insurance mobile solutions provide the technology to make insurance products accessible through mobile phones Insurance agency management system are helping insurance companies to streamline their processes and providing quick resolutions to claim and queries of the insured. They are also helping these companies save significant costs that can help them to provide more affordable and efficient products to the rural population. Insurance companies need to accept technology savvy solutions to ensure accessibility and affordability. The economic reforms brought forward by Jan Dhan accounts, unified payment interface, and Aadhaar integration will hasten the adaptation to these models and guarantee a whole new market for the insurance sector. Second one is bite-sized insurance products. Another important element to facilitate the penetration of rural India by the insurance market is bite-sized insurance products and policies. These policies are available to a wider population because of their lower premium rates, low requirements for documentation, and easy accessibility through smartphones. They are more popular among first-time policy buyers, millennials, and those who want to insure a specific risk. A few examples of such policies are dengue insurance, travel insurance, cab ride insurance, among others. So there are several insurers who provide tailor-made insurance products for low-income groups as per their need. Some insurers have licensed from IRDAI to sell their products. Others have partnership with traditional insurance companies to create these products and make them available to the masses. The partnership of big players like Max Bupa and Rajnish Tokyo with Mobic is one such example. They collaborate to offer coverage for vector-borne diseases and term insurance plan, respectively. Max Bupa had sold close to 100 hospice cash policies daily by the end of 2019. In the same year, Mobic had also sold close to 5 lakh policies and collected a premium of INR 4 crore. The sales figure shows the quick adoption of wide-sized products which can reach rural India. Developing these products is one thing, but making them accessible to low-income group is a different ballgame. So to help with that, the insurtech firms provide their customers with the option to choose the right insurance products from different companies through their POSPs, point of sale persons. So the hybrid model of providing products and services through physical and digital modes make these products more easily accessible to the rural population of India. So the need for trust and awareness among the rural population is there. Insurers also need to build trust and improve financial literacy to improve insurance adoption in rural India. The customization of products will help with building trust as the agriculture sector is heavily dependent on variable factors like weather, change in government policies, natural disasters, among others. So including these unforeseen circumstances in the policies benefit rural India and win their trust as their requirements are accounted for. The second step will be to onboard local agents, that is POSPs, who will adopt door-to-door selling methods. This will ensure that the first-time buyers can trust the insurance products as it will be introduced by someone from their community. It will also facilitate awareness of various products that are available in the market to choose from. The rural market still have a huge scope for growth. Insurance products can be tailor-made to provide coverage for small businesses, especially the ones started by women, catastrophe funds, and crops that are not covered under schemes run by Government of India. Insurance companies can invest in training their employees and design thinking to focus on creating products that specifically cater to the rural market and analyze methods to make them accessible to populations for their benefits. So India's insurance sector is undergoing significant reforms led by the Insurance Regulatory and Development Authority of India. These changes focus on digitization, improving claim processes, and extending coverage to rural areas. The goal is to increase the accessibility, transparency, and consumer trust in insurance products, aiming for insurance for all by 2047. So, regulatory reforms are the lifeblood for any sector, and they play a pivotal role in ensuring that the industries continue to evolve and innovate to meet changing consumer needs. Insurance was earlier seen as one of the traditional sectors, riddled with challenges like lack of transparency and mis-selling, which often made consumers skeptical about its value. In India, where insurance is a safety net for millions of families, reforms becomes essential not only for protecting consumers but also for enabling trust and innovation. For years, India's insurance market remained stagnant, with low penetration rates and standard product offerings. The landscape changed with the Insurance Regulatory and Development Authority of India recognizing the need for urgent reforms and undertaking a comprehensive overhaul of the sector. Insurance players are making the most of recent regulatory reforms that serves as a guiding light towards a better tomorrow, especially in under-penetrated areas. So new players have entered the market to solve the complex consumer problems and enjoy the capital influx to support the innovative vision. These reforms today form a crucial part of India's growth story that is evident with its impressive 8.2% growth rate in financial year 24. So the key industry players revealed at the summit that the general insurance industry is planning to increase its penetration to 1.5% of gross domestic product by 2030, up from the current 1%. So we had 0.5% penetration when we started. Reaching 1.5% to 7 to 8 years should be feasible. The general insurance industry is expected to grow at a compound rate of 20 to 25% for the next 10 to 15 years due to the reforms and progress witnessed in the industry. In the past 2 decades, the industry has grown at a rate of over 16% despite experiencing price corrections. The per sum insured price that was charged as an industry has been seen moderation, particularly from 2008 to 12, and a favorable environment. So the penetration of general insurance companies in India stands 1% compared to 3.2% of penetration in life insurance companies. India's penetration is also lower than that of other countries around the world. Due to this low penetration, the leaders of major general insurance companies believe that there is a 4 times untapped potential opportunities in India. So to bridge the gap between life and general insurance penetration, companies can focus on rural areas where the most assets are uninsured, leading to an absence of risk transmission. Furthermore, favorable regulations, new products, fresh capital, innovative customer engagement methods, and support from digital technology can help increase the sector's penetration. So the change initiated by the regulator have facilitated the launch of new products and innovative customer engagement methods, whether in business sourcing, servicing, or claim settlements, with appropriate support from the digital architecture. This, combined with more new entrants into the industry, will help improve penetration and awareness across the nation. Thank you. Thank you very much.